Okay, so I wanted to respond to this from Michael's pictures. Hopefully it's as, you're going to say sufficient as the last time you said there was a golden cross. So, Michael, we still have a golden cross in the weekly. So, this is the problem with commenting when you don't have the fundamental understanding or the knowledge associated with technical analysis at a finite level, or even at a basic understanding. There was a weekly golden cross in XRP for only the third time in its history. We broke out. The weekly support right now on the 200-day is 51 cents. We need to get back over 54 cents approximately to try not to start an invalidation process. If we get back over 54 cents before the daily close tomorrow at 8 p.m., that would show a wick down. But even if we stayed at the 50 cent level or 48 cent level, it would take 2 to 3 weeks to invalidate this golden cross in the weekly. So a close at 50 cents tomorrow isn't going to invalidate the cross. You need the 20-day to come back through the 200, and that's several weeks out. Unless you come down and hold around the 37 cent area, it'd take approximately 2 weeks, two weekly candle closes. It is going to be impossible to happen on this one. So you did not invalidate the weekly golden cross. The last 2 times this happened, we dropped better than 60%. Right now, we've dropped about 56% to the swing low. 37 cents, or it's actually about 54%. 37 cents would have been that 60% breakdown on this weekly golden cross. That's why, do we continue that formation? Do we continue going down to the 2020 uptrend at 37.5 cents to satisfy that 60% move? Or is the 53 or 54% dive from 93.4 or the swing high, 937, down to the swing low of, what would we hit? Like 43.2, 43.3 depending on exchange. So does that satisfy it? I mean, that's a better than 52% dump. Just the last 2 in the weekly time frame. After the golden cross, we had a better than 60% correction. So now we've had a huge correction here, but 37.5 cents roughly, the 2020 uptrend, gets you down to that exact break point. So now the only way to tell if we're going to get down there and have a quick wick or something is if the bulls lose first 50 cents, but 49 cents is very critical. That's the ascending triangle we broke back into after losing the falling wedge. And we can still come back into the falling wedge with a quick wick down in the weekly. That's the importance of this weekly candle close. If we close below the falling wedge, we're going to support the dump below, at least for now. But we still need to try to reverse rally and see first, 51 cents is the weekly 200-day resistance. So you would have to get over that first layer. Assuming you're holding 49 cents like we have been, it looks like the bulls are stopping in at least at that level as we flip the short-term bear flag into a very short-term bull flag, that the technical target's 54.4. On a breakdown, the technical target's 43.3, so just pay attention to that. But right now, it looks like with the weekly golden cross, it's going to take several weeks to invalidate it if it becomes invalidated. But I'm just telling you, the prior 2 times this happened, we had the exact same type of dump just to rally in the successive weeks. As the weekly volume right now is crashing. We started with 534 million in the weekly time frame when this move up of 94% happened. On this current week, we're only at about 137 million, which I estimate it'll probably end at about 170. But the breakdown's been substantial. So, for all those reasons and more, we have not even invalidated the golden cross, and we're still working within the same formation. So please, if you're going to comment, gain a basic understanding of what you're commenting about.